What is it? From the hood, fire and gunshot.
That's it, right?
That's the only two things we knew that we. You run, I run.
All right.
If they plastic kind of small.
Hello, everyone.
Columbus, Ohio is where everything happened. There. I'm still in Fifth Third Bank all over up there in that area.
Yes, big on big in our history. This is considered Midwest in a sense, big up that way as well. I met with the regional district manager 2 days ago from there because they're coming around and visiting all of us, just kind of give like a warm welcome and everything while we're transitioning over. So a little unique, trying to get used to the name Fifth Third versus saying Comerica.
Yeah,
So,
yeah.
But I'm definitely excited. They have a lot of good programs that they're going to offer to customers. We're going to open 150 more branch locations in the state of Texas alone. So with our acquisition, we'll be the ninth largest bank in the U.S.
Wow.
So a lot of growth there.
Okay. That is a lot of growth.
All right, should we get started?
All right.
Okay, let me just give a quick introduction. Hello, everyone. My name is Chelsea Lilly. I'm the Community and Economic Development Extension Agent for Prairie View A&M University. We are here to kind of get into the meat and potatoes of banking and funding with Mr. Dom Lewis. If you have any questions, feel free to ask him, or you can ask me at any time. I'll be right here. If you look in your folders, there are some materials that we'd love for you to use as resources. Also, there is a survey there. If you could take the time just to take that survey, even if you've been here before, just take it again. This is a different one for each of our speakers. We really appreciate that. And outside of that, I am ready to go when you are, Mr.
All right. Well, thank you.
Yeah.
Thank you so much. Again, yes, hello, good afternoon. My name is Dom Lewis. I am a banker, relationship banker with Comerica Bank Fifth Third. I'm here to talk with you guys about banking relationships and funding your business growth. When it comes to businesses, a lot of things they don't consider is the relationships that they make with the bank or the lender and helping their business growth through getting more access to capital, finding more resources, being able to have access to different programs that can help benefit and grow their business, as opposed to just being the bank that they go to make their deposits. So I'm gonna dive a little bit into that and kind of go from there. Just a couple of housekeeping rules. I'll let her get checked in first before we go a little deeper. Hi, good afternoon. Hello. So, little housekeeping rules. This is very informal, open format, so I'm open to questions you can ask away. I also like to chime in and get other people's feedback as well while we're discussing. So, I don't want this to be more like a school environment where you got to sit and go through slides. There can definitely be some interaction and kind of going from there. All right. So, some of the things that we are going to talk about today. One of which will, of course, be why banking relationships matter. Going a little bit more details about that. So also how business credit works. We'll also talk a little bit about the difference between personal and business credit, why it's important to have business credit, how to establish it, as well as some of the common financial mistakes that entrepreneurs make when it comes to them starting up their business or having their business established and looking for funding. We will also talk about how to prepare for business funding, what documents you're needing, the conversations you need to have, and questions you need to go to. And then resources. In the handouts that is inside the package, it does have a list of resources in there as well. And I'll talk a little bit about that later on as we go through. The whole kit is more of a checklist as far as making sure that you're prepared to go in and talk with the lender about business funding and making sure that you have all the tools you need to be successful in that avenue. All right. So before we dive into why business relationships matter, I just want to ask you guys feedback, kind of go from there. Can I get your name again, ma'am?
Brittany.
Brittany. So in your opinion, why would you say business relationship with the bank matters?
I think establishing that will better help you to know like what you're needing and let them know what your needs are and where they can help you out on the side.
Absolutely. That's good. That's good. And I didn't get your name, ma'am.
My name is Patrice.
Patrice, got you. Just a little chime in as well, in your ways or in your own definition, why would you say business banking relationships matter to you?
I think about growth. I think about and securing the future. Sometimes when you're making plans, you may not have the liquidity to be able to make that move. But, you know, if you have a solid relationship with your bank, it helps to you to build and to see beyond. It's like a scaling it.
Okay, I like that. Well, good answers for the both of you. I don't even need to go over this slide. Y'all already got it. I'm just joking. So yes, those are definitely key points about that. A big misconception that people run into, and I run into this with business owners, is when I ask them about their bank and how do they utilize their bank, to them it's just, well, it's just where I deposit my money. You know, I take my transactions, do what I need to do, and I just put my money in the bank. And when I'm ready to talk to somebody, I'll go and talk with them about a business loan or a line of credit or whatever it may be. And that's kind of there's a lot of resources, there's a lot of opportunities that are being missed when you have that mindset for that. So kind of some of the things you guys talked about that I'm going to bring up. Why it matters is the bank or the lender or the organization can help you get access to capital. You may need funds for supplies, you may need funds for payroll, you may need funds for a lot of things, so it helps you get access to capital. It helps you manage your cash flow through systems like QuickBooks or other different ones that utilize through the bank. It also helps you prepare for growth. So you may have some contracts that you're leaning into, or you may have some business ventures, things that you're wanting to build on in the future. Well, having a business partner can help you prepare for that growth. And it also helps you navigate through financial challenges. One of the challenges that I've seen with some of our business customers that have employees is they may go through a dry period. You know, their business may be big in landscaping, and of course, spring, summer is great, but in the wintertime, business gets slow, where you still have employees to pay. So being able to talk with a business or banking professional, a representative like myself, a banker, can help you navigate through those financial challenges, making sure you have capital, you have funds needed to continue the payroll for those client or employees that you have. And then also it helps build credibility with lenders. Having that established relationship up front does help when you need to come in and talk about a business loan. There may be a building that you're wanting to purchase for commercial, and if you opened an account 6 months ago but never did anything with the account, never had a conversation or established any type of relationship, it'll be really difficult to walk in and be like, hey, I need a $500,000 business loan. Can you help me? You know, versus them knowing who you are, knowing how your business operates. It definitely helps when it comes to the underwriting part. It helps with knowing which route to go as far as how to obtain and access those funds. All right. Next, the role of a financial institution that helps with the business growth. So some of the things that it kind of helps support business in multiple ways, at least I know what we do on our end is the initial step is helping establish a business checking account and treasury services. So let's say you own a convenience store and you have card payments for services. You may use Zelle, you may use some of the other ones that have card readers, you may have card reading services, whatever it may be, we can help you establish that. It helps you establish and also keeps track of your transactions. It also comes into play when you have lines of credit. You may need a temporary line of credit just to help get your business growing, get your finances going, and it helps there. Also with equipment financing, you may have a large equipment that you need to purchase. Establishing that relationship helps you get the financing for that, as well as commercial loans and payment solutions. Before I move forward, I want to ask, how many of you actually currently have a business? Okay. How many of you have been in the business for over 5 years? What type of business you have, sir?
Courier service as
Okay.
well as consulting service.
Okay, career consulting, got it. So, as you're seeing, you have your financial needs, especially with the courier services, when you think about gas, when you think about, your equipment for your vehicles. Do you have fleet vehicles?
No.
No? Okay, so if you did have fleet vehicles, or even just your individual vehicle, equipment, maintenance, different things like that, you want to establish capital, you want to establish funding to cover those things that you don't have to dig into your own personal pocket, your own personal spending to deal with. So just having that relationship helps with those particular areas. Doing so. Now we're going to talk a little bit about the relationship and what it can open doors to. When your banker, like myself, understands your business, these are some of the ways that we can help. We can help you recommend the right loan products. You may need funding for a particular project, and in your mind, you may be needing X amount of capital, where in most cases, it may be difficult to get a larger loan. Well, we have that conversation with you, but like, well, hey, we can actually look at a business line of credit, maybe easier to get access to get the funding you need, and then we can work and build from there, help you establish a game plan. Also provide financial advice, not only from a business standpoint, but on a personal standpoint, and really how to establish those necessary financial accounts for the goals that you're wanting to obtain. We'll also connect you with different resources. We have small business bankers that we work with. We also work with third-party programs and SBA loans that can help you connect with those resources too. So some people like doing their own legwork, doing their own research. I know me, when I operated out of my business, there's a lot of stuff that I didn't know about, and it made it tough for me as far as finding the necessary resources, finding the necessary funds that I needed to help my business grow. Had I had someone on my corner, as far as a banking representative who knew where to find avenues or resources, it would have made things a lot easier for me. So something to definitely keep in mind, as well as connecting with the resources. Also, speed up funding decisions. You may have a certain ideal or goal or timeline that you needed to access funding. And instead of walking up to just any particular bank, you can have a banking representative that can already work with you now, know how your business operates, know how you go from point A to point B when it comes to your income that you generate, and they can help you as far as making the right decisions to get the funding faster, instead of having to wait a long period of time due to misinformation. All right. One of the biggest things I did want to talk about, there are some common financial mistakes that entrepreneurs make. Over the years, I have seen a couple of different mistakes. One of the biggest ones that people run into is mixing your personal and business finances. I know some people, they have their own personal account, and they use their own personal account to pay for business supplies. When they receive payments, whether, let's say something small like a t-shirt business that you have, you receive the payments in your own personal account, you spend out of your own personal account. Mixing in your personal and business makes it very difficult from a banking standpoint to find you credible as far as, hey, I want to help loan you money, but I'm seeing you got a bunch of Starbucks transactions, you got a car note payment, and then I see you got payments from Zelle and everything else. How do I know which is which? So mixing in personal business is the biggest one. Also, another one is not building business credit, and we'll talk a little bit about how to build business credit in the process. When you don't build business credit, it kind of goes in lines with your personal. One of the biggest things that people don't do is work to separate their personal and business credit. It's very key and very important to do that, and we'll talk a little bit more about that here shortly. Poor bookkeeping and financial records, not keeping receipts, trying to do everything off just through memory. I know I've experienced that in the past. Well, I know I paid for this on this day. I know I paid for that on that day. I think I remember when it comes out, but not having it on paper. And a lot of times you can find yourself behind or in low of access of funds just because you're not handling your finances correctly or documented. Waiting until a financial emergency comes to talk to a bank. I can think of a real life example with a customer of ours. We had a customer that have a business where they do construction. And a lot of their contacts or contracts that they do are considered net 30, net 60, net 90 pays. And what that basically means is with their client, they're signing a contract, they're saying, hey, in 30 days, we'll pay you for the work that you're doing now. Or in 90 days, we'll pay you for the work that you're doing now. Well, here we are in March, April, May, June is when they're looking for a paycheck. They're low on funds. They still have employees that they have to pay. They still have all of these necessary things. Well, because they didn't have a relationship established with the bank, they walked in the door saying, hey, I need to get a $50,000 loan. Can you help me? Well, sir, you don't have an account with us. You know, we have to look at business records. We have to go through all of these things. And in the process of being able to get you approved, you'll probably be at that 90-day mark when you get your fundings. So having that relationship established up front, up hand, and having that banking relationship with the banker will help. Okay, well, hey, let's go ahead and look at your finances. Let's look at your details, what you have, and let's go ahead and get that funding for you. The last one, not understanding available funding options as well. A lot of people, at least I know from 2020, this is when they had the big SBA loan booms and the PPP loans. A lot of people are still going around looking for SBA loans, and these can be for smaller projects. It can be a $25,000 project. It can be a $30,000 project, something small, and they want to go through the process of getting an SBA loan, which is fine. However, it does take more steps to get there. It does take a longer period of time. It does take necessary things when in actuality, they can look at a business line of credit. How it's convenient because it gives you quicker access to funds. Those normally take about 3 weeks to close. Plus, it works kind of like a credit card. So it's kind of an as-need basis as you need the funds and kind of go from there. Plus, it's easy to manage. And then their rates are not as, I'll say they're competitive and they're not as difficult versus some of your other traditional loan types. So being able to understand the difference between the different loan options, being able to know what funding options are available, being able to know what resources available are all key things that people are necessarily needed. And when you don't understand those things, it does make it difficult for your business. So those are some of the misconceptions, the difficulties that people run into when it comes to their business. See, they're struggling right now. All right. Build financial systems early in your business journey. That's as we go through a lot of these, that's going to be my main thing, is build relationships early. For those that have a business, do you have a business account currently for your business?
Kind of.
Okay.
I say kind of because my bank, one of the banks that I use says don't use it for business. I don't know why, but that's where the money is.
That's interesting. Okay, learn something new. All right. So, well, it's good for those that do have it, if you are business owners, to have that separate account established and to grow and utilize those resources as well. All right. Next, we're going to talk about funding and government contracts. What type of business do you have?
One is like my podcast, and the other one is for doing content.
Okay. Good deal. Does anybody, as far as your business is concerned, work with any type of contracts, government agencies, MCs, anything like that? Okay, well, good. We're going to learn a little bit today then. And for future reference, if you decide to go in there, and even for those that are streaming, if you are business owners that work with government entities, we're going to talk a little bit about that. So when it comes to government contracts, they are looking for the business to demonstrate financial stability, showing that they have working capital and the ability to fulfill large orders of projects. So with businesses, a lot of them are the net 30, net 60, net 90 type of organizations. So let's say I have a cleaning company and I'm trying to work a major contract for this big corporation in downtown Dallas. Well, one thing that they're gonna look at and saying, okay, if we give you this contract, do you have the manpower, do you have the supplies, do you have the staff to fulfill this role? Before they accept you and accept your bid, they're gonna wanna know these particular things. So it's good to have all of this stuff intact and ready to go and to be able to present to them to help you be able to earn that bid. Because it can get pretty competitive out there. You know, most companies or organizations want to take the best bid, the lowest bid, to save the most money. But at the same time, if you have all of your documentation, if you have all of these necessary things, despite what you're offering on your bid or what you're asking for, you're showing your value and worth and showing how professional you are as a company, which will give you better chances to get the bid. Now, when it comes to funding, having access to funding, whether it is a line of credit, whether it is access to different capital, business loan, these things, it'll allow you to hire staff, it'll allow you to purchase materials, it'll allow you to manage any delayed payments like those net 60, net 90 things. So as your business grows, as you're jumping into your business, you're going to want to consider these things as far as how much capital do I have to jump on these business projects? How much access do I have to, or funding do I have to purchase materials? You know, for your podcast, you may want to get more equipment. You may want to get more camera equipment. So these are things that you have to think about in the long run. You know, will I have enough capital? So let's say if I want to rent a place to have my podcast and start bringing on more people and make it a bigger thing, you know, these are things that you got to consider and factor in. So that's where having that business relationship will work, with being able to have access to those items. All right. And then again, strong financial preparation help businesses complete for large opportunities. It also helps build that bridge between your ideas and putting those ideas to action. So again, as I stated before, a lot of my stuff is going to talk about establishing relationships early and having the preparation. Those are key things. All right, now we're going to talk a little bit about business credit. Who's somewhat familiar with business credit? Everybody business owners? Okay, good deal. Well, business credit measures the financial reliability of your company. A strong business credit profile improves your ability to secure funding. Just want to read over this little statement that I have here. Business credit is essentially a financial profile that reflects how your business manages its financial obligations. So just like your individual personal credit, businesses also develop their own credit history. Are y'all familiar with that? That you have separate business credit from personal? I know most people know, but as far as the details and how all of that necessary works, a lot of people don't really verify the difference. Some of the institutions or companies, businesses, whatever, that utilizes business credit to help secure funding is banks like us. You also have vendors like Uline, like Staples, those that look at business supplies. They also look at your business credit to help you get more business funding or business line of credits. You also got suppliers like Granger, Best Buy. They look at your business credit, as well as financial institutions like LendingTree, Capital One. Now let's talk a little bit about the personal versus business credit and the differences between the two. For your personal credit, as you know, it's linked to your Social Security number. It's used for personal loans, credit cards, home equity loans, mortgages, and it's reported by the Consumer Credit Bureaus, TransUnion, Equifax, and Experian. For your business credit, it's a little bit different. It's linked to an EIN number unless you are a sole proprietor and you utilize your own social. My advice for those, especially if you're establishing business, is to get a separate EIN number. That helps you separate your personal credit from your business credit. And as you establish more business credit, you can alleviate and not have to use your own personal credit or information for those business purchases. It also helps track company payment history and is used for business lending decisions. So one of the neat things about business credit is you're more easier to get approved for loans on your business versus on the personal side. Just because they don't look at so many different dynamics like a personal credit. Where personal credit look at how long you had credit history, what's your blended credit history, how many loans you got, how many credit cards you got, what's your payment history looking like, what's your credit availability, all of these different factors that goes into it. And then it ranges even deeper when it goes to personal credit cards versus auto loans versus mortgages. On the business side, it's pretty straightforward. How long have you been in business? What's your payment history looking like for your business? And what is the purpose of this loan, the business purpose? Why business credit matters. It gives you access to larger loans. So as you grow your business and you're establishing more business credit, you'll be able to get larger loans and grow that way. It also helps you obtain better loan terms. As I'm sure you know, if you got bad credit, terms are gonna be outrageous. You're gonna be paying a lot more interest over the life of the loan. Even on the business side, it works the same way. With business, the terms are not as stringent as it would be on the personal side. It's more of the availability and access to get a loan on the business side. But with better business credit, you do get more favorable loans. It also reduces the personal liability. So as you establish more business credit, you'll be less likely having to use your own personal credit as a guarantor or even your own personal social. And the more that you get that separated, the better it will be for you. So let's say you have to purchase a vehicle for your business. Instead of you having to use your own personal credit and have that mortgage payment or business loan payment listed under your own personal credit that you have to qualify and utilize for, it'll be listed on your business. Benefit of that is, let's say a few years from now, you want to buy a house. When they look at all of your debt to income ratio, anything that's tied to your business credit will not reflect on your personal debts. That helps a long ways. For those that are really big in the business, they learn the tricks of the trade and start buying everything under their business. So it shows that they have no personal credit liability for any of these particular items. So it helps you when it comes to purchasing vehicles, when it comes to making other large important purchases and still keeping your personal credit separated. Even on tax purposes, it benefits that way as well. Also helps build credibility with vendors and lenders. So the more that you establish business credit, the more likely they're going to be wanting to extend the line of credits that they offer to you, which will give you more purchase power. And then it also helps with any other businesses or ventures that you wanted to dive into, because now you have established capital that you generated from your original business. And then it also allows your business to grow independently from personal finances. So kind of goes hand in hand with reduces the personal liability. That would be my takeaway advice for anybody as you're growing your business. Try to do as much as you can to keep it separated from your personal. So that way, let's say 10 years from now, you want to do something completely different and you want to dissolve your business. You don't have to worry about that having a negative impact on your personal credit just because you're not closing accounts linked to your credit. Everything is linked to your business and kind of establish you go from there. All righty. Now, just to talk about a little bit here as far as how businesses are being tracked by agencies. DNB, Dun & Bradstreet, this is one of the main ones that look at your business scoring model. So kind of separate from your FICO score, you'll have a DNB score. A lot of businesses will go based off of that to look at your funding for you. Also, you have Experian Business and Equifax Business that kind of work in hand with DNB. What they do is they monitor your credit usage, public records, and financial risk indicators as far as mainly your payment history. Those particular factors are the things that they are looking at and being tracked by. So again, it's not as stringent or as tedious as your personal credit and gives you more access to more business capital and business funding. All right. Next, we are going to go to steps to build business credit. So before I dive into that, I just want to go around and ask for everyone's personal thoughts and opinions as far as when it comes to building credits. What are some steps that you think of that you can utilize to help build? Any takers?
Well, you spoke about a bit ago, trade lines. I used Home Depot. That's why I had a lot of those myself.
Absolutely, absolutely. Anybody else have anything you want to chime in?
Like, when I think of, personal credit, the debt to income ratio is a big thing. And so having access to resources, but not necessarily utilizing it to the maximum amount allows them to show that you can handle.
Absolutely. No, that's good. Credit usage is a long way. If you ride the line, maxing out those business credit cards month after month after month, that's going to negatively impact your DMV score. And then there's also from vendors and lenders, when they look at it, they're going to be like, she's a little risky. I don't know if I want to lend to them just because it doesn't show that they are managing their finances well, kind of teetering on the line. Plus, it also reflects how much income that you're bringing in too, because if they see that you're only paying minimum payments and you're still right at that limit, for them it's going to reflect that, well, maybe their business isn't producing as much as they should. So a lot of those things play an impact, very similar to personal credit. So some of the steps to help build your business credit, for those that are business owners or that are aspiring to be business owners, number one most important thing is to register your business entity. You can register with the Secretary of State, you can register with the Texas Comptroller, you can even register with other Secretary of States of different states. I've started seeing a lot of people using Wyoming. Like I say, they have an easier process and it's cheaper to register your business there, but it still works the same as if it was in Texas. So it's a little food for thought.
What's the name of that one?
Wyoming, the state of Wyoming.
Oh, the state of.
So they have the Wyoming Secretary of State. You can register your business with them as well, even if you don't physically have a business in the state of Wyoming. So a lot of people started using them because it's cheaper to get your business registered with them, and it's a little bit of an easier process. When it comes to the banking side of things, we're not going to frown upon you because your business is registered in the state of Wyoming versus the state of Texas, as long as you meet the other factors. But that's just a little side note there.
Do you have to have an address in Wyoming to do that?
No, you don't. You don't. I know there is, and they kind of give you steps on how to go about doing that. You don't have to have a physical building or a location in Wyoming. They give you some leniency on that. I have a customer that opened a nonprofit business, and they filed their business in the state of Wyoming, even though all of their addresses is here in Arlington, Texas. So this is something you can definitely look into doing. But
You can also do it with the registry agency that you have out of that state. You reflect on their address too.
correct, exactly. So main thing is definitely register your business entity, and then of course obtain an EIN. This is what's going to separate you from your personal credit, your personal profile. I know some people that are sub-proprietorships or sole proprietorships, I should say, they utilize their personal Social Security. What's going on?
What's going on?
Real good. They utilize their personal Social Security number, which is fine, but as you go deeper into your business, it's best to obtain a separate EIN number, even for those that are sole proprietors, to get a separate EIN number as well, just to help when it comes to establishing a bank account and then working to build business credit. So obtaining EIN, very important. Open a business account, start that business relationship early. So for those that are self-employed, even if you have a business account now for your business, utilizing that account. I have customers that are coming and open a business account. They'll make their minimum deposit and then they'll just let the account sit there for 6 months to a year on end, which is fine, but it doesn't really establish a relationship. So when it comes to them wanting to grow their business, one of the things they're gonna look at is, well, let's look at your business profile, let's look at your banking profile. How often do you utilize your bank? How many times do you make deposits? How many transactions do you make? What are those steps? And if all they see is a minimum deposit of $50 to $150, they're gonna be like, well, are you really utilizing your business? Are you really generating income? You know, so opening a business bank account and really establishing and building that relationship. And then lastly, establishing a DUNS number with a DNB Dun Bradstreet, because that is what's going to help you with your overall fundings and line of credits when it comes to supplies, when it comes to getting business credit cards with suppliers and certain vendors. And then work with vendors that report payment history. So Uline is a good one. They do report your payment history to the DMV along with some of the other ones. You can go online and Google search which ones they utilize and report payment history. Really try to align yourselves with them, because the whole purpose within the first 90 days of your business and your business growth is really building up your business credit, really building up that business profile. And then lastly, pay your obligations on time. If you want to kill your business credit, miss a payment. It's the one. And it's gonna go downhill from there. That's self-explanatory. Don't really need to delve into that. The main thing is being consistent. Consistency is key. Following these 3 important steps, and then these over time, working to build these up, building up the payment history, utilizing vendors that report payment history, establishing a really good business relationship, and going from there.
I was actually listening to the live before I was coming, so I actually have a question with something you were saying earlier. Now, if you registered your business in the state of Texas, or like if you registered in Wyoming, you were in Texas, but Texas having reciprocity, like how would that work?
I'm sorry, repeat the question.
With Texas having reciprocity, how would that work if you had like a business in Texas, you were a resident of Texas and you tried to register in Wyoming?
Like how does it work as far as with the state of Texas, or?
Yeah, will it be affected in any way?
No, not in any way. So the main thing here is really pertaining to the relationship with the bank and building the relationship with the bank for financing. There really isn't going to be any difficult or issues there with you registering with the state of Wyoming and then operating out of the state of Texas. There's not going to be, from a banking standpoint, we won't have any issues with it. We're not going to raise any red flags or anything like that. It's just some people register their business at the states. We have some people that are relocated from other states and their business is registered in the state that they're relocated in. It's still fine. The biggest thing that they want to look at is, how is your business operating? You know, how are you receiving your income? How do you make your necessary payments? You know, how do those things particularly work? And then what we come in is, we want to see, how do we align to help you grow your business? So just a little off track side thing. One of the things that we really help our customers with is merchant services. We have a lot of customers that use card payments, whether it is for any services that they do, or if they're selling any products, whether they have a gas station, convenience store, pop-up shop, whatever it may be. So being able to establish a relationship with them with merchant services is a great way to start building that relationship, because they'll track the merchant services, track how many times you're receiving payments in, and then payments going out. And then from there, when it goes to looking at business lending, that helps improve the relationship. That helps improve your chances of being approved for whether it's a business line of credit or whether it is for a business loan, depending on the type of business that you're doing.
Okay, I had another one too.
Yeah, go ahead.
You were talking about government contracting.
Mm-hmm.
Now, do y'all work with clients that have like relationships with credit insurers?
What do you mean by credit insurers?
Credit assurers. Like,
Credit.
so there's like, this is a business out of Houston.
Mm-hmm.
I think he came and presented at the bid that we went to. He has a credit assurance company, and it's like he funds government contract companies, you know, before they go in and execute their bids, and then you pay them back after you get paid your net, that 60, net 90, whatever. So, I wonder if y'all had like relationships with credit assurers as well.
To my knowledge, and I'll have to ask our business banking team, I don't believe we do have any with credit assurers because we're the ones that's doing the lending.
Right.
Per se. But that is definitely a good thing to have, especially if you're starting off and wanting to, you're needing the capital up front and you're trying to grow your business and trying to build your business profile. So it's definitely something that can be useful. Yes,
So
ma'am.
Edwin's question generated a question for me regarding the credit assurance. Many times when we're bidding, or when there's a bid on federal contracts, or you need to demonstrate that you have the financial vitality to be able to sustain this contract for a certain duration prior to, like you said, the net 90, 60, et cetera. Do these types of credit assurance companies provide proof of funds or proof of access to capital when companies are bidding on those state or federal contracts?
It'll be more so the question for the credit assurance company and how they would operate. I personally would think so. If they are offering funding in the meantime, obviously when you receive the funds, it'll show that you have the capital necessary. Now, the timeline as far as how long it takes to receive those funds prior to your bid going through, that's a credit assurance question that you have to ask the representative for that. I know for us, the way that we operate is, for when you have to have an established relationship, we give our customers a 4-month window from the time that they open their account to the time that we can look at getting a business line of credit, which business line of credits go up to $100,000. So that's more of they look at your bank statements, transactions. They don't go off of tax returns or anything like that. They go specifically off of that, the bank statements, just to kind of determine how much you bring in and bring it out. Those are easy to get funded. Those are easy to get approved. Once you have that approved, you can request to receive the funds up front, or you can receive it in payments. This is a way that you can help show that you have capital to get that business contract. And then once you have the business contract, down the road, you can look at going the next tier to a small business loan or a different type of business loan.
So do you know whether or not the bank looks at that money as, or frowns upon the money that is from a credit source versus the business has generated that money in regular payments, that's real income, that's built over those 4 months or built over a period of time, versus real money, true capital that's come in from clients or driven through revenue versus getting this,
Receiving the
you know what I mean?
insurance.
Like this.
Exactly, I know what you mean. So one of the things they're gonna look at is, for one, how long the business has been active and how the business has been operating leading up into that time. I wouldn't say they necessarily would frown upon them getting funds from a credit assurer. However, let's say they've only been in business for 90 days and that's the only money that they have,
Right.
then I would pose a problem, because from an underwriter or a lender standpoint, they're gonna ask, okay, well, how are you gonna pay them back and how do you generate income? How much
can't
income do you
demonstrate
generate?
longevity.
Exactly. If you don't show, because you have to show that you're making money in order for them to loan you out money. So and that's the reason why they have that timeline on the window. Those are good questions to ask, definitely. I think a credit sure would definitely be a good resource, especially if you're dealing with the net 30, net 90. Like I said before, you have guys that's obviously working on your team that they got to get paid, because if they don't pay, they're probably not going to show up to work. So you want to make sure that you have funding to access them, but also keeping certain documents to generate and show how much income that you're bringing in, because these are what the banks are going to look for. Which I'll get to that here in a moment. I actually don't have a slide, but I'll talk about as far as what documents that they look at. Did you have any other questions pertaining?
No, I'm gonna wait on the next slide.
Okay. No problem. Like I said, this is housekeeping. It's open format, informal. So any questions, please open and ask. I even ask y'all to chime in as well. All right. Next, we are going to talk about monitoring your business credit, as we discussed establishing your business credit. pretty basic, pretty practical. As an entrepreneur, as a business owner, you want to review your credit reports. I would say general term every quarter, but if you are looking to build capital, you're trying to look at a business loan, I would say every 30 days, definitely monitor it just to make sure there isn't any erroneous, anything on it that needs to be corrected. If for whatever reason it's not showing your payment history from some of these vendors, you want to talk with them to make sure it's being reported. So that way they can show everything that you're doing for your business, help your business. Also, paying vendors early before the due date, it helps out as well, just for those particular vendors, especially if they lend out funds as well. It'll give you a better opportunity to get credit line increases, get increases on whatever lending that they're offering to you. And then also maintain low credit utilization. Similar with personal credit, you want to keep that low credit usage and show more available credit. So that way it shows that you can manage credit well, you can manage risk well. And if the lender sees that you're able to manage your credit well and manage risk, manage debts, then they'll be willing to lend out more. They'll be willing to offer you credit line increases and offer you other particular loan types that come in. All right. Now, something I want to bring up too is preparation for a business lender. I know this doesn't really get talked about much, just because most people are, let me just work on myself and then when I'm ready, I'll go talk to the lender. But as far as knowing what necessary documents to ask, what questions to ask, how to go about it, those are some things that really go into play. And my goal is to tell you what you need so you can go in there and come out successful. One of the couple of things they want to look at is your financial statements, profit and loss statement, balance sheet, bank statements. Have those on hand, you have those ready. Try to use your best months. If you had some months that was a little shaky, give it a little time if you want to build up some income just to show, because honestly, this is kind of like your interview. You're interviewing with the lender to show, hey, this is what I have to be lended on based off of what you can see versus the conversation that you're going to have and what you provide. For larger business loans, they will look at tax returns. So like a SBA loan, some don't, but majority of them do. And then other larger loans, and by large loans, I'm referring to $1 million to $10 million. When you're looking to get into those large scale of things, the more funds you're looking for, the more documentation you're going to need because it's adding more risk on that. Also, you want to have a cash flow projection. These, I've seen people do these through ChatGPT and other ones where you can kind of scale your business and then it kind of helps project where you're going to look at for the next 3 years. Within our company, we actually have a program that's called Size Up, which is kind of useful for our business owners. It helps you track all your business as well as all of your competitors within a 50-mile radius of your business itself. And then it kind of offers tools as far as what you can do to help improve your cash flow versus your competitors. It's pretty neat. And this is a free resource that we offer to our business customers as well. Another one is a clear funding and a purpose plan. When you come in, really having an idea as far as what you're wanting the funds to go through. Don't just come in and say, I need more capital, but you got to be more specific. What are you needing capital for? What is your projection as far as how much capital you're going to need over the given period of time? What is your plan to pay it back? How you utilize it? Being more prepared, because it's going to increase your credibility and it's going to speed up the decision for the underwriter. I've had people come in to do business line of credits and they send over bank statements that got NSF payments on there, NSF fees, all these different things, and they're trying to get $50,000, but it's like, well, I'm not going to approve you because you can't manage your money well, Or I have somebody that come in and they don't have necessarily profit and loss statements, balance sheets, or even bank statements as a whole. They're just walking in and trying to see what they can do to get a loan. Or they don't even have a relationship established and they're trying to just come to get a business loan. So it's some of those little things that you want to prepare yourself and make sure that you have a meeting the lender. That way you're set up for success. And you know, you don't want to have to get those where, okay, well, that's great. Well, I'm gonna send you an email and you send over what all documents you need from me, and then we're gonna look it over. It's better to just come in and be like, hey, this is what I have, so you can make your copies, and we'll talk about it, go through it, and then we know. So that way, the first person that you're talking to can already set up the pictures, set up the portfolio for the lender, the underwriter, who's ever going to be looking on the back office to underwrite this file and get it approval. If you get a good relationship with the banker that you're working with and have the necessary documents needed, it makes the process very seamless and very smooth. You'll see a lot more approvals as you go through that. All right. And some of the questions to ask when meeting with a lender. Don't be afraid to ask questions. Don't. It's good to ask questions so you can set up the proper expectations for yourself when knowing if you're going to be approved, how much you're going to be approved for, and also the different type of loans that are available to you. So some typical questions that you can ask is, what financing options are available for my business stage? So I may be new in the business, I may have been in the business for a year, I may have established credit already, I may be establishing new credit. These are questions that I ask to kind of help them gauge you as far as where you need to go. Another question I ask is, what financial documentation will I need? For some products, you may only need a profit and loss and balance sheet or bank statements. Some may need tax returns. My advice for working on the mortgage side of things on retail and working in underwriting is the less documents that you provide, the better. The more documents you provide, the more questions is going to be asked. For example, if you're looking at a business line of credit and it does not require tax returns, don't send tax returns. Because if you send a tax return and it has some question on there, they're going to ask about it. And now you got to send them more documents. And now you may have to call your CPA and do all of these other things when all you initially needed was just bank statements. So it's one of those things where it's really understand what documentation you're going to need. That way you submit exactly what's needed and nothing more to make your process for you easier. I know that sounds counterintuitive, but trust me, it makes sense. The next one is, what credit profile do lenders typically expect? So this is a good question to ask, especially if you go into a larger banks like Chase, Bank of America, etc. You want to ask them, what type of credit profiles are you looking for? Do you need a personal guarantor when you apply for these loans? All of these different things just to kind of set yourself up so you're not wasting your time sending over documents for something that you may not qualify for based off of where you are in your stage of the business. Next question, which is a good one. How can I improve my chances for approval? Some people would just come in and say, okay, this is what I need, thanks, bye. But really have that conversation as far as, what do I need to improve my chances? I want to get this loan. I need to get this loan for my business. What do I need to do? And help them diagram and help you. If the banker that you're talking to can't answer these questions for you to help you, you may have to reconsider the bank that you're working with and if they're really working in your best favor. Because the thing is, as a bank or a business partner, our goal is to help you grow your business. We're not just somewhere to store your money. You know, we want to help you get to the next step of where you're wanting to be through that relationship. So they should be able to confidently answer these questions and also be able to help you out along the way to get to where you're wanting to go for your business. Last question is, what timeline should I expect as far as application to approval, to underwriting, to all these necessary steps, so that way you can set proper expectations for yourself. If you need a business loan in 21 days, you want to have that conversation to get a realistic timeline, because if you're going to take more than 21 days, then that product that they're offering may not be in your best interest. So it's good to really set up proper expectations and really ask these necessary questions to help you. All right. And I did add myself a little note on here that I wanted to present. more so pertaining to the paperwork, but we already kind of went over that. Now, one thing I want to talk about is resources for entrepreneurs. In the packets, if everyone grabbed one, it should be a list of resources on there. Now, this is not just for business funding. This is also for other business programs as well, different things to help. Some of the resources I have is utilizing small business development centers, like the one that we're in here. They have a lot of resources. Also, a unique program that is around that a lot of people don't know about is called SCORE. SCORE is a mentorship program where for young business entrepreneurs, well, new business entrepreneurs, I'll say, it'll link you with someone that's seasoned, whether it's in the same type of field that you're in or somewhat similar, that can help you grow your business, and it's absolutely free. A lot of people don't know about this. I've known some people that have used this, and they've established great relationships with their mentors just to kind of help them grow their business. Another one is looking at your local economic development programs, like PVAMU extension program, the one we have here. There's other economic programs that are listed in the packets as well that you can utilize. Also, community leaders and community programs, they have a lot of resources too that can help you with your business and business education workshops, like this particular one. So definitely utilize your resources. Can't say that enough. There are so many free resources, free opportunities and things out there. Even for minority business owners, there's resources out there for you too to help you grow your business. And it doesn't require you having to go through a lot of hoops and hurdles to do that. So just a little personal thing about myself. I started off in the mortgage industry. I worked in the mortgage industry for about 8 years. And I was like, I don't want to work for a company, I want to work for myself. I see other people making money, I want to be my own mortgage broker. So I jumped into it, but I didn't utilize any resources. I was kind of just, let me just establish my EIN and go from there. And when I tell you, it was rough. It was really rough. And I kicked myself because it's like, I had a lot of good aspirations. I had a lot of ideas, but I didn't know the resources. I didn't understand building that business relationship help. You know, I was using my own personal funds that I had saved up. I ran out of capital. I was getting deals coming in, but as y'all know, market went a little crazy a couple years ago. Rates shot up, home prices shot up. And for me, feeling like I'm in it alone, it made it tough. And it's like, okay, well, maybe this ain't for me right now. Maybe I need to take a step back and do something different. Now that I'm on this side, on the lending side, I'm looking like, man, how did I miss all of this? All these opportunities, all these different things that I could have jumped in and did, but didn't. So that's why I'm here to explain to you guys. If you wanted to have your business successful, utilize these resources. Like I said before, SCORE is a great one because you're going to be linked with somebody that's been there before, and they're willing to help you grow your business. You have other particular resources and programs and resource centers like here. There's all other different type of funding resources that I have in the packet as well, and different other ones. You know, the more you know, the more you grow. That's all I can say with that. Yes, ma'am.
One of my earlier questions, you mentioned the Dun & Bradstreet credit score and all of the basics that you need to do. But for small businesses that are just possibly beginning, what are the best ways to establish business credit and build business credit when you don't already have like a E-line in place or a vendor, or it counts like it takes money to make money?
Take money to make money, exactly. Establishing an account with the bank will be the first thing. Talk with them about a business credit card and seeing how to utilize, if you can get approved for one. Some of them will go off your personal credit as a guarantee to get you approved for a business credit card. I know Granger and Uline are generally fairly easy to get signed up for to help establish. And I only use those because that's a lot of examples that a lot of people have used over the years. Even if you don't or need anything to order supplies.
I was gonna say, I'm having tools that was.
Exactly. See, and I was the same way.
They got
For Uline, it's a lot of
You get office chairs from them.
yeah, they have a lot of office supplies, furniture. I mean, and it's really not really on the aspect of, well, I just need these supplies. It's more of, who is an easy lender or vendor, somebody I can go to help establish and build my credit? I could be in photography, shout out to the photographers out there. Uline don't have anything that I need, but I want to establish a relationship with them to build and kind of help build my credit. So, and there's other ones out there that you can look at, but trying to find those easy companies that can help you establish and build credit, and then just kind of go on from there. The biggest thing that it looks at is payment history. So once you get a credit established, buy something, pay it off quick, and just kind of keep doing it, and then look at opening other business credit models. There's even, and I have to check, I know we do it on the personal side, I have to double check on the business. We have secured credit cards that they'll offer too. So if you have some type of capital, so let's say if you have $3,000 for your business, you can use that $3,000 to open a secured business credit card and then utilize it just like a normal credit card. That'll help build up your business credit. The biggest thing is really trying to build up that DMB score, because the more you build that up, the less you have to use your own personal credit score.
It's like Dun & Bradstreet would offer some kind of credit card product. Like a product, that would be smart.
Yeah.
But I guess too easy.
Yeah, but they have everything though.
They do.
Yeah. Dun & Bradstreet, it's taking the place of the Dunn's number score that was government contractor score is now EYN for you.
Yeah.
And the Dunn's number like just like a credit.
Yeah.
Credit number.
Exactly. That's generally what it is. So, those are some ways that you can kind of help establish business credit.
I guess my question is derived from the whole catch-22 piece. Like you gotta have some type of, even for the secured business credit card, if that exists, you gotta have cash on hand to be able to establish. So I didn't know any other ways to build business credit besides a Uline or a vendor. And I don't even know if they check business credit before you get an account with someone.
Yes and no. So some they can start you off with like a small credit limit that you can just start off with, just for starting off credit and kind of build and grow from there. Versus you having to have things established. And like you said, with any business, it takes money to make money. Depending on the business type, there's ways that you can grow your capital before you even get into the business credit side. But the biggest thing I would say is establishing that relationship with the bank, just because when you have a relationship with the bank, there's opportunities to get more business funding, and you may not necessarily have all of the capital resources that you need at the time, but because you have established a relationship, you've had your business EIN for a while, you're showing that you're doing some transactions that may get you approved for either business credit card to help you start establishing more business, or even looking at the next step, which is the business line of credit. All right. Aside from there, some of the key takeaways I just want to talk about from everything that I presented today. Successful entrepreneurs build banking relationships early. They separate their personal and business finances. They establish strong business credit. They maintain organized financial records, and they seek guidance before pursuing funding. Financial preparation creates long-term growth opportunities. The biggest one, building a relationship early, separating the two, and then really seeking guidance before pursuing funding. Even if you're going to open a business account, let them know what your plans are. They should be asking you up front, what type of business you have, what are your goals with your business, what is your 3 to 5 year plan. While having that conversation with the banker, ask them, let them know like, hey, I want to do a big project here in the next 6 months to a year, and I know it's going to take X amount of dollars. What is the steps do I need to do to access that, to get to that point? And these are free resources because obviously you have the bank account established with them. You don't have to pay or go somewhere for them to teach you this. This is something that you can talk to directly from the source, talking with the lender. If they give you a roadmap, hey, you need to do A, B, C, D, E, and F, and then by G, you get your money. Now you know exactly what you need to do to get to those particular steps. All righty. Are there any final questions for me?
Yeah.
Yeah.
I
Yes,
just,
ma'am.
I was taking pictures to take notes later, but before you got to, like in the beginning, you were breaking down, your slides and I missed one of the slides.
Okay. You know which one it was referring to?
It would have been,
While she's looking for that, anybody?
So I got a question, it's gonna be a little bit off key, on
Okay.
starting a business in the farming industry.
Okay.
So I have some clients, some investors that are looking to buy a large plot of land. What is the farming requirements for loans in that sense? For getting loans for farmers or farm land? Is there a big difference, or do you even work with that, or is it just kind of trying to get out, like test it?
Yes and no, it really depends on how they go about it. So, if they're looking to purchase a particular property, quote unquote, in itself, you can look at a USDA loan. Now, that goes off of your personal information and everything, but you can look at a USDA loan and build off from there. If the sole purpose of this property is to only have a farm, then yes, that's where you would kind of go into a commercial loan aspects in there, which it may take a little bit of steps just because you have to establish credit, you have to establish and show that necessarily work. In most cases, if somebody's buying it, they probably have investors that they're looking to pitch in and go from there to get that loan.
Yeah, that's what I was trying to figure out, that USDA versus commercial loan versus, they haven't started a company yet, so that's the reason why they got there, to get the farm. So I was trying to figure out what's the best type of loan to go after in the beginning.
So depending on where they are,
They have the cash, they have cash.
Mhm.
So that we got a nice investment amount of dollars.
okay.
So just like you said, secured loans, other things of that nature, but I just wanted to see how can we quickly start off, let them know. And then not only that, they also have excellent credit.
Absolutely. So they can look at that. They can also look at potentially getting a line of credit. So what some people do, let's say you're a homeowner. You own your house. You've been in your house for 20 years. It's paid off or just about paid off. You got a lot of equity in it. You can look at getting a home equity line of credit, which works like a line of credit or a credit card based off the equity of your home. You can use that money to fund or purchase that property, that project, and then as it's going to get established, you can get a separate commercial loan for that one to pay off the home equity line or vice versa. So there's different ways to kind of go about it. It's just a matter of, A, do they currently own a property? B, are they looking to purchase? Where they're purchasing it, is it just land, or is there a property or a dwelling there or a home there already to where you can look at a USDA loan? Or is it going to be more solely business purposes where you may have to look at outside different funding resources to fund that particular property? So biggest thing I would say is for those, definitely it's worth having a conversation about, to kind of see where they're coming from, where their plans are, to help steer them in the right direction so they can take the right course of action to get the right program for them, what they need.
Thank you.
it was the slide, before personal credit versus business credit.
Okay. Let me see how fast I can go back. Oh. A lot of clicking, sorry. I guess I should just move straight to the computer. Alright, and it was this one. Understanding business credit.
Oh, yeah.
So on this particular one, it just talks about the reasoning why they have business credit and then who utilizes and monitors the business credit for you.
I have a question as far as like the creative goes, right? Because I'm in the creative space too. Is it, I don't know if you are the one to like suggest what to register your business entity under. Is it better to be under an LLC or a sole proprietor?
What type of business is it?
So I create content. So I'm not a photographer, but I do videography, but I also do work with clients. So I guess I get confused on which one would be better, like for my business.
For tax purposes, a lot of times it's better to do an LLC versus, so I'm For tax purposes, it is better to do an LLC. That way you can keep it separate as its own separate EIN, from that aspect. And also just when it comes to, how you grow your business, if you're gonna hire other people, how you pay those other people that are working under you, it's good to have an LLC versus a sole proprietorship, on there. And generally, those are the two main types, but I know just from a tax purposes and how you list your business, LLC is generally the best way to go. And that can be for any type of business. Yes, ma'am.
So I have a question, because she was talking about, splitting what you put your business under. This one has to do with the naming conventions. I had seen online somewhere that said that, people who, name their business with Latin, like the language Latin, based, names, they are seen as more professional. Have you?
I've never come across that.
And I mean like the language Latin, not Latin, like, you know what I mean?
Yeah. No, I know what you mean. I know what you mean.
An actual LLC being named
Yes,
that?
you've heard that,
Yes.
okay.
I guess in a sense could be. I know from us, I've seen every LLC name under the sun. I've seen people say First Corner Store LLC, different things like that. But I mean, it's the name itself. It doesn't really play a big impact on it versus how long the business has been established, and are you generating income going from that aspect? I mean, from a client perspective, maybe it may be more professional. They maybe want to work with you based off of name. But when it comes to bank or lending partners itself, the name itself is not really going to move the needle per se for somebody.
Yeah, it might be more from like the entity, state entity, federal entity perspective as well. Because if you have like a certain name, like I was telling a client of mine, they had like a cologne type service they wanted to do with its name, Rollers and Blades. I was saying you could name, the LLC something separate, then do a DBA. The state.
Yeah. You can definitely do that with DBAs within the LLC. Now, if you do have an LLC with a DBA, it does have to be registered with the Secretary of State for the DBA name. If it's sole proprietor, you don't have to register with the Secretary of State if you're using just a sole proprietor DBA name. You can just register with the county. But if it's LLC, it does have to be registered with the Secretary of State.
So with sole proprietor, you can't have like contractors work under you, right? Like if you contract work out, like it's just you.
Yeah, it'd just be you.
Okay.
It'd just be you. Because basically, you're like a self-employed individual working for yourself. So anybody that you contract and work with to show proof of pay, you have to have 1099s. Just to show generating versus LLC is a little bit different.
Thank you.
No problem. Any other questions? I like questions. All right, well, that is my time. I do appreciate y'all taking the time to meet with me. This here is my information here, and it's also on the business card in the packet. For those that do currently, pushing these buttons, put this down. For those that do currently have a established relationship with a bank, I would still love to have a conversation with you. How we operate with Comerica Bank is our main focus for the last 3 to 5 years has been business bankers, especially small business bankers, entrepreneurs. We have co-working spaces that we offer free to our customers. We have all of these different programs like Size Up and things that we offer free to our customers. We actually have designated small business bankers within our regions. So not only will you see me, but you'll also see another person that's solely going to be there for the purpose of your business, to have a conversation with, to come and visit your site. If you have a storefront or whatever it may be, to have convenient check-ins with you, just see how things are going, to answer any questions, whether you need any business funding, merchant services, you need to set up a service where you can do wires, whatever it may be. We have designated people that do that. And the reason why I say that is because every customer that I've worked with that have come and opened an account with me. I ask them who they bank with, and then I have that question. When's the last time you spoke with the business banker there? And I'll all get that blank stare look on their face because that's foreign language to them. I know some of the large banks, and I'm not throwing no names out there because I don't like dragging people's names through the mud, but some of the larger banks don't have that service. It's more, if you open an account with us, that's great. When you want to talk about something else, set an appointment, and then we'll schedule a time to talk with you. And then even then, it may be the bare minimum basic. They're not calling you to say, hey, I want to come and meet with you and see how we fit with your business and how we can help you grow. We're really big on that. That's part of the reason why I work with Comerica is because somebody that came from a business ownership, it would have been great to have a bank that can talk with me to help me piece together those pieces that I need to get those steps together to help grow my business. So that's my little marketing spiel, my little advertising piece. So thank you. If you don't have any questions, I appreciate y'all. Thank you.
All of y'all are registered for bids, so I'm not even gonna go over that spiel again, but if you're alive, I want for everyone, especially in these packets, to look at all our social media, look at all our websites, to make sure that you are registered for the Bid Academy, which Mr. Lewis will actually be speaking a little bit more in depth about all of this at the Bid Academy. It starts April 1st. Definitely something that you don't want to miss, and it's absolutely free, brought to you by Prairie View A&M Extension Community Economic Development Unit. If you have any questions for any of us, I know we've been through some questions, but if you'd like to speak kind of separately, we're up here. So thank you again for coming out. We hope to see y'all later on this evening. We have the storytelling session with Stack Moses, and then of course tomorrow, we're gonna go into a brand new session where we talk about apprenticeships. All right, y'all have a good day.
Thank you.
Did you want to get one? Of course we have to get a photo. You missed the photo yesterday. We're gonna come over and take a really quick photo. If you don't want to participate, that's perfectly fine. I'm gonna turn this off real quick. Yeah.
You want me to press the button or turn it on?
Notice y'all turn it off.
Okay.
Yeah, I was trying to find it. Wonderful. Now, we're gonna have to talk, my husband to start the business, and he is looking for, he wants to know how to get the business. I told him we need to come talk to you. We're gonna come up here, over here by the, yeah.
Kind of iffy, but the first day I came, I was looking.
I was trying to be in my picture.
I gotta bring my motion.
We're just gonna take a quick, efficient selfie. Efficient selfie. If I can.
You gotta be in it too.
Oh, yeah, I saw you.
Yeah, no, he's right
Okay.
next round over here. We're gonna come up here.
Oh, she's the expert.
Over here.
Yeah, but I'm gonna start taking them. Big smiles. Get on in.
Find your windows.
There we go. Perfect. Big smile. 1, 2, 3. 1, 2, 3. And I'm gonna take one of y'all.
Hold on, you got him out of there.
Do I have him out here? I did, because you leaned back.
Find your window.
Oh,
I
okay.
saw it. She saw it. But she said content, right?
There it is.
There, well done.
There, I'm tall, so I'm.
You talk, that's why.
You gotta bring your arm down.
Say it a little bit like this.
Now I'm not in, but it's okay. Big smile, big smile.
There you go.
There it is.
All right, hold on. Let me make sure. Oh, now we back. Here we go.
Cool.
1, 2, 3. 1, 2, 3. Let me get y'all real quick. Big smiles. 1, 2, and 3. Thanks, guys.
What you in it, Chelsea?
Huh? Oh, I did. That's why I did myself.
No, I'm talking-
Oh, you want to? Yeah, we go. No, we good. We good.
You good?
Yeah, because they are walking out. We good. And I can also superimpose myself right here.
Do you want to? I can take y'all's.
Yeah, do you mind? So you want to take a picture? Here we go. Let's get on the side of this. Okay. Sippy cheese. Awesome. Thank you. Thank you. My new pounds.
Okay. So you
Yeah.
take the.
What do you have to say?
Okay, I know something you don't.
Yeah,
Y'all gotta put these together.
No,
Y'all have
I
a
definitely want to set
program,
up you know, not just for him.
40
Because I also read it.
Make sure you got
I've been
it.
doing all this.
Yeah, I was just like, I didn't want to go too far.
What's that? That's the only thing is.
Yeah, I think I forgot the price on that. So I got like the middle button. It was $40, $10 more than I remember. Hey, I looked, I said $45. Yes, I forgot the person that asked me that. I was in there like, well, I should just put a little $10. Are you coming to the one later? That's fine. Yeah. It's around here. You're gonna follow the circle. It's gonna take you around. Mine today for this building keeps trying to make me turn and go around the back. I was like, no, it's right here. Yeah, that one I think she said it's just like go around the circle and then take you back there. That's what the building I ended up with 2200. The sunset. Up there.
Most of these kids build companies, build all the different pieces. Doing it the way they take it, it's like trying to find someone to do one of those super project. More so just do it yourself.
I'm gonna get that.
Yeah, I'm open.
Okay, that's perfect.
I am registered, but I also.
Do anything to the
He's like, I'm
body.
here to look for the.
Yeah. So,
The videography work I do under.
as far as.
Oh, and learning,
We're
like,
talking about
cinematography and all the things.
certain
like,
cooking
yeah.
that-
And I'm gonna show you exactly what you're doing, 'cause I'm gonna wait. I'm gonna wait until I'm ready.
Do you want me to end the stream?
Yeah, you can.
Okay.
So I think it would be,
Since I'm on here, guys. Hi.
also,